Oh, do I have an important one for you, whether in the US or in Europe or just about anywhere. The first thing we need to talk about is the inflation sensation. I know you're feeling it. The second thing we need to look at is gas going up. I'm talking about natural gas and propane and all kinds of gas, and they are going out of control. The third thing we need to look at is China going down. I'm going to show you some statistics, some indicators relating to their economy today. And then in a future video, I want to highlight what's happening with Evergrande, which is considered to be their Lehman moment. We'll see if that all happens. But of course, I've got a lot to talk about in this video. Let's go. So let's dig in right away. Priciest food since 1970s is a big challenge for governments. I know that you are feeling it, and you could see in this article out of Bloomberg, whether for bread or rice or tortillas, governments across the world know that rising food costs come with a political price. The dilemma is whether they can do enough to prevent having to pay it. If you remember Arab Spring, you look at all these uprisings. A lot of times when food becomes too expensive, I've heard the indicator 40% is the breaking point, but I think personally it's a lot less than that. People with their disposable incomes, with their total incomes, you look at that and it just breaks down to, relatively small percentage compared to, let's say, real estate, but it's the most critical by far because you gotta eat. So this is hitting people where it hurts really, really fast today because, as they say, global food prices were up 33% in August from a year ago. A lot of people, I polled the audience, and a lot of people were saying that their prices have gone up 20% in food, 30% in food, some people even more since, let's say, the beginning of 2020. So it's affecting people big time, but it depends on what you buy. It depends on where you live. You have vegetable oil, grains, and meat that were really, really high in price. There's no doubt about that. But looking at it from a broad spectrum, you will see that it's pretty bad no matter what we look at. And it's not likely to get better as extreme weather, soaring freight and fertilizer costs, shipping bottlenecks, and labor shortages compound the problem. Dwindling foreign currency reserves are also hampering the ability for some nations to import food. I talked about this in the Money GPS trifecta method of investing, specifically talking about the rising food costs and what you can do about it. I believe I covered it in the last video. Talking about that, but I will cover that in the future. It's one of the PDFs that I've been talking about recently, adding those to all the videos, okay? So you could see right here some charts that correspond to it. Inflation hotspots, surging food prices are especially affecting emerging markets. The darker the area, of course, the greater the percentage. And it shouldn't surprise anybody, but certainly it's affecting people all over the world, okay? It doesn't have to be in emerging markets. Grocery bills, food is more expensive than almost any time in the past 60 years. For some strange reason, I had done the video talking about prepare for the highest food and energy prices that you've ever seen before in your lifetime, and people were saying, no, that isn't true. It's literally here. The data is there. I don't know why people would say that, but anyway, we're not done yet. Where it ends up, I have no idea, but we're basically there right now. Anyway, look at natural gas futures, okay? This is the UK natural gas futures. You're also seeing the Dutch natural gas futures, and they have gone up considerably right now. Going parabolic. So the chart goes back from 2016 and it fluctuates, it's up, it's down, and so on. But we've never seen anything like this before. Then you got the Mont Belvieu spot propane prices. This has gone to levels we haven't seen since 2014. Looking at the propane supplies, and I don't know if you could see it on the chart here. So this basically goes back from 2019 up until the present. And these peaks here, we should be at this level right now, but we're not. You see, while the supply has come up, it isn't anywhere near what we had seen back in 2020 or 2019. All right, so that's definitely not a good thing. You got supply problems, you're going to have price problems, all right? Big time. Look at the German power prices. It's just gone straight up. There's no doubt about it. You're going to pay more for your energy. You're going to pay more for your food. How can you offset that? There are ways. I talk about it in those PDFs if you haven't seen them already, okay? I talked about this preparedness within the last week for sure. If you're not a subscriber already, you've got to subscribe to the channel, okay? I am working on all these PDFs right now that are going to give you tips at the end of each of the videos. If you want more of that kind of stuff, it's in my playlists, but I'm gonna make sure that each video includes it. How do you do that? Just simply give a thumbs up and you're more likely to see these videos coming up in your feed, okay? Don't forget to give the thumbs up, and of course, you gotta subscribe if you haven't already. Europe's gas extends a record rally on Russian supply woes and wind. If there's not enough wind, Europe's not getting power, and that means you are going to pay more. They're talking about the record-breaking run in this case here. It is insane, and I wanted to get into this right now. The biggest trade right now, the one that's getting a lot of attention, is uranium, because you had Sprott getting their physical ETF, uranium ETF, up and running, and they're just buying everything up like crazy. And many have likened this to what we had back in 1980s, okay, where you had the Hunt brothers going in and they were buying up all the silver, and they were really turbocharging the price up to where, you know, it got, and then of course it comes down afterwards. But this right here, a small market, uranium's a small market, and yet there's so much consumption right now. So you've got Sprott and you've got another one, I can't remember the name of it at this time, but they are buying up like crazy, putting a lot of pressure because the supply just doesn't come on. You know, whenever you're mining something, you can't just snap your fingers and make it come online. 2021 full cost curve for global operating uranium mines. And you could see that this has gone up. Look at this. Look, the Bank of America long-term uranium price is at the 90th percentile of costs. That's all it's trying to say, okay? That's all it's trying to say. It's also just something that doesn't highlight in the chart here is the fact that you have the physical demand because these companies are now going in. Like, typically what you would have, if I flip over here really quickly, we're looking at Cameco Corporation. Okay, we're talking about a big uranium company here that deals with this. And look at the charge, the turbo charge from back in, let's say, August 19th until today. It has gone up considerably. Okay, this has been, you know, there's not much attention here right now at this point, August 19th. And then suddenly the traders start picking up on it and it becomes hot. The volumes are getting super intense today. Now that is a company that deals with it. But as I said, you've got Sprott that's been buying it up directly. So I'm looking at this, Sprott Physical Uranium Trust, and the same situation. So it depends on how you want to play it. But if you're using the Money GPS trifecta method, you would get in on both aspects here. Both. Why not? You're still playing uranium, but you're diversifying. People take this like the weird aspect of investing and they say, oh, diversifying. Yeah, Buffett. I heard a quote on Instagram that said Buffett said that, don't diversify. It's bad. Diversification, even within that particular trade, can be done. Okay, you buy the physical, you buy the companies, and you start getting around this. That's called the Money GPS trifecta method. But anyway, let's go in a little deeper on the Money GPS insights and talk about this. Inflation is red hot today as you see the prices of just about everything rising. Energy prices, particularly in Europe, are hitting record highs right now. You're going to be paying more for the foreseeable future. And let it be known right here, I talked about this in previous videos, of course, and now I'm showing you yet again that traders are picking up uranium like never before. The prices are surging. Here's just some more information related to the inflation. Here's how inflation is hitting the online prices of everything from apparel to furniture. Doesn't matter what you see in your particular situation because, it's basically pervasive. Wherever you go, you're seeing kind of the same information. It's crazy. But the prices of online goods have now risen for an unprecedented 15 consecutive months. This kind of thing doesn't happen too often. Now, what about in the stock side? Okay. Estimated retail flow of US equities and ETFs by month. Even though back in 2020 there was this huge surge, it has gotten even faster, even more intense. Now it has declined from its peak certainly, but this is an uptrend if you've ever seen one. Like I said, this is March 2020 at the beginning where things were already crazy. Like if we saw 2019's numbers, it would be, this kind of thing. It would be much, much lower. So that has surged. And what we're seeing here is more money going into these type of different stocks that are trying to take advantage of the trends. A lot of momentum happening today. But then you get the opposite end, and this is how we transition into the talk about China today. Billions wiped from Macau casino stocks as city eyes gambling review. There's a lot of stuff happening in China today with the regulations and things that are really hitting the stocks hard. Macau casino operators saw billions wiped off their value Wednesday as their shares collapsed after officials in the world's biggest gambling city unveiled plans for a crackdown that would tighten their grip on the already beleaguered industry. Going down here just quickly, this is showing you a couple examples. Lost 25%, lost 20%. These things, like 30% in this case here, we're talking about super short periods of time, and things collapse into a bear market just like that. So that means that your money, you've got to watch where it is. If you put your money into these stocks, you're going to take a hit, right? And they say buy good companies or the reopening trade and so on. Well, you bought into the reopening trade and suddenly you get smacked. You got to watch what happens, okay? It's not just about China or what have you. This right here, in my opinion, one of the most important indicators, talked about it many, many times before, the China credit impulse, okay? Is it bottoming out right now and it's going to come back up as they suggest? Or will it fall further? Will it go sideways? Who knows? What is the China credit impulse? It's basically the amount of money being lent out. Okay, so obviously they lend money out, people start building houses, people start investing in businesses and so on. So that right now had declined into the negative. That was a couple months ago. I talked about it. And now we can see. Now this is some data. Like this happens and then several months later we get a slowdown in the rest of the world. That's literally what happened, but we don't know in time. Like it's not something you can necessarily put, this is 100%, but it is quite accurate. And so, that slowdown could still be, let's say, pushing on into the next few months. Look at this. China's industrial production, retail sales, fixed asset investment, property investment. It's all looking very weak right now. Of course, we're coming off super highs, but still. Okay, this is just the retail sales coming down considerably. That's not good. You want that domestic consumption. You really, really need that at a time, especially as I say here, U.S. equity market sensitivity, share of U.S. equities, highly sensitive to economic growth. That's the blue line. And essentially just telling us that over the years, since 2000, essentially, there has been no care. No care. They don't care. Since the financial crisis, highly sensitive to liquidity. Oh yeah, big time. Meaning they don't care about GDP. All they care about is money printing. But you knew that already, and that's about it. Look, if you want to get the information you need to know, then you've got to be an insider. The Insiders is free. It's my way to get to you. All right, it's right here at this card or at themoneygps.com. If you want these type of videos to come up in your in your feed, all you gotta do is hit that thumbs up button. If you want to signal to the others that this is a good video, hit the like button. Support me as well by doing that. Thank you very much. If you haven't seen this video yet, you definitely want to check it out. Click it and I'll see you there.